Hey guys, welcome to the Wealth for Real YouTube channel. I'm your host, Christopher Anastasio. It is Tuesday, October 29th, 2024. And I had to show you guys this tweet that QE Infinity put out. I think it came out this morning about 8:34 a.m. Just look at this situation with the U.S. 10-year Treasury note breaking 4.3% overnight. Literally, and he doesn't have the monthly chart here. In another tweet, I think he put the monthly chart showing from like the last Fed meeting in September to now, which is now about 6 weeks, the interest rate just climbing in an upward trajectory, if you can imagine it, just like that, ever since they cut the rate, which was supposed to bring this 10-year Treasury note figure down, right? Because it's supposed to cue off of that Fed funds rate, and it's supposed to create the benchmark for us to borrow money when we borrow for a mortgage, when we borrow for a car loan, when we borrow for college, things like that. It's the 10-year Treasury note. I've come to learn this. 3 months ago, I had no inkling about this, but the 10-year Treasury note creates that pivot for how lending rates are established. It may take a cue from the Fed funds rate, but really that 10-year Treasury note is in that bond auction marketplace, and it is being bid on to certain levels. And when those levels drop, when that demand drops and they have to give more enticing yields to bring more demand in, this is what happens. So now the 10-year Treasury note yield goes up, right, in order to attract more buyers to the bond auction. So the 10-year Treasury interest rate goes up, which then means things like mortgages, car loans, college goes up for the rest of us. This is why what you're looking at right here is why I just saw it this morning as well. I forget what account posted it. Mortgage rates have now climbed above 7% again. So they had a very brief drop after that Fed funds rate cut, I think from like high sixes to like 6.6-ish, somewhere around there. And from about the mid 6 region, now back over 7%. And this is the reason why this bellwether is something we all should be paying attention to. Like, are those Fed rate cuts actually working, or are they just masking the real problem, this problem, underneath the hoopla of, oh, the Fed cut rates again. Yeah, Fed's going to cut again. The really interesting thing, guys, will be to see if the Fed cuts rates again in November, which is now right around the corner. I think it's 6-7 November they meet. So we would know on the 7th, are they going to cut again? And the question is, are they going to actually look at the data and say, well, wait a second, our rate cuts are actually making people lose confidence in this 10-year Treasury, government debt in general, so we shouldn't cut again, right? Which would then be a shockwave, I think, to the markets. So then does the Fed do the opposite and actually keep cutting the rate in lieu of the fact that the 10-year Treasury is screaming, don't cut rates anymore? The demand is weakening for these Treasury notes. So anyway, guys, just had to share this with you. Wanted to kind of get the word out some more about this. It's something that I've now come to get into the habit of checking every day. What's happening to the 10-year Treasury? Where is it going? Is it going up or down yield-wise? What is that telling us? What's the signal? So really fascinated with that, guys. And let me know what you think of it. Let me know what your feedback is. Like, are you looking at it? Are you worried about it? What's the deal? I mean, just look at this, guys. Previous close 4.286 to 4.32 going into October 29th. So really, really bad indicator there. But anyway, thanks for watching the video. Thanks for subscribing. Thanks for liking. Thanks for feedback, comments, etc. Can't thank you guys enough. Looking forward to hearing what you think about this.